Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It's lecture time. And this week, guys, we're talking about psychology, charts, and losing streaks. We're going to dig deep today, right? I'm going to be your therapist today. We're going to talk a lot about what is holding you back from being the trader you want to be, from taking that next step, going to that next level, breaking through that plateau. We're going to talk about all of those things today, okay? Because a lot of you are doing things that are just absolutely detrimental to the future of your trading. All right, and unless you stop doing those things, you're not going to break through those barriers. So I'm going to highlight some of those things for you today, and I'm also going to tell you and teach you some ways you can overcome them and work through those things. Look, life is about adversity, period. Everyone has it. Everyone gets a similar amount of luck and unluck in this world for the most part, and you need to start viewing the world differently. It's 90% what happens to you, 10% how you handle it, okay? Or I should say it's 10% what happens to you and 90% how you handle it. Kind of messed that up. But anyway, we're going to talk about that today. All right, psychology, charts, losing streaks, how to overcome those losing streaks, how to have the proper mindset, okay, so that you're not selling your trades too soon, so that you're not holding stocks and bag holding, so that you're not overtrading, so you're doing what you're supposed to do when you're supposed to do. We're going to talk a lot about that today, all right? If you like these videos, click that like button, smash, hammer that subscribe button. I'm Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is psychology, charts, and losing streaks. I kind of put together a few different topics, but they all merge into one, so to speak, and we're going to kind of focus on what you should be focused on, what's most important. We'll dig a little bit into psychology, we'll talk a little bit about charts, and then we'll end with losing streaks and how you can overcome losing streaks and what can be expected in trading in general. A lot of people have what I would call unrealistic expectations for this business, and they come in, and because of those unrealistic expectations, they fail when they otherwise might have succeeded. And that's unfortunate. So we're going to talk about a little bit, three different topics that will ultimately merge into one. And I think it's an important one because no matter where you are in your trading journey, you can always be better, right? You can always have a better mindset. You can always read the chart a little better. You can always overcome a losing streak or a winning streak better. So let's dig in. Psychology, charts, and losing streaks, all right? So this is nice. This excites people, all right? And right now the newbie's like, sweet, gonna get a lecture on topping tails and extended moves, reversals, blah, 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 right? But this isn't really all that important. Now, I'm not trying to suggest it's not important, right? It is, and you have to have a foundation, right? But I'll give you an example. You can have the greatest golf swing in the world, but what happens when 200 people are watching you? Do you get nervous? You can have the best putt in the world, but when it's to win the Masters, it's not just a putt anymore, is it? It's like your mind starts wandering. Your mind starts thinking, oh, this is for the Masters. This is to win millions of dollars. Oh, my gosh. And what happens? You change something because mentally you're so scared, freaked out, nervous, emotional that you don't do what you normally would have done if there wasn't pressure on you. And you're like, well, where are you going with this? Where I'm going with this, and we'll talk about it in broader detail later and more specifically as well, is that in a vacuum, you probably do a lot of great things. In the simulator, you probably do a lot of great things. But when that real money is on the line, or maybe you're coming off of a losing trade and this next trade gets you back to break even, and getting to break even is breaking your plan. People break their plan because it's like, whew, I'd rather be break even than down today. Think of the attitude adjustment right there. I'd rather be break even than down today. They didn't, nowhere in their mindset did it say, I'd rather be up today than down today. They're literally at that point just trying to get their money back. They've lost their vision, right? They've lost their way. Maybe that trade's supposed to make 2-1 and you should actually be up 1R today, but because you lost on the first trade, you get out at 1R and you make some ridiculous excuse for it. So my point I'm making is, while these topping tails and these bottoming tails and normal or wide range bars in which prices had been higher than supply force, yeah, oh, that's great. That's wonderful. And you should be studying these things. You should be studying this in professional trading strategies every single day. And there's a lot to be learned by a stock that's up 4 or 5 bars that shows a topping tail and a doji bar. Certainly location and size of the tail matters, right? How it got there, where, all that stuff matters. But that's not what's going to actually pay you. All of it matters and is necessary. But that's not going to be the primary thing that pays you. Because this type of stuff you will eventually learn, right? Even Forrest Gump can learn the charts. All right, so the charts, while complicated at first and confusing at times, that's not the issue. After 3, 6, 9, 12 months, most people, if you showed them a perfect chart, they go, that's a perfect chart. But what keeps them from trading the perfect chart? That little thing between the ears. That little thing between the ears is what keeps them from trading to perfection. So while we spend a lot of time in lectures talking about charts and patterns and technicals and support and volume and resistance and bottoming tails and topping tails and extension and climactics, blah, 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 blah. Today we're going to talk about what separates the difference between great traders and the people that are still struggling to break even, right? Candlesticks only matter in context. Guys, this is an amazing, amazing slide. It's amazing. But guess what? It's not what we're really talking about today. Okay? So location, level, and depth of penetration matters a lot, like a whole lot. Like this is one of the most powerful slides you'll see in a long time, right? The larger the reversal bar is in relation to the prior bar, the more potent it is. And that is true. So when you take a look at these 2 bars on the left, you have a wide range red bar here, but the level and depth of penetration from the green bar is only about 40%. That's decent, but I'd rather have a level and depth of penetration that's 140% because it shows a much greater level of commitment. That's wonderful. But you know what? That doesn't take very long to learn. I mean, literally learning that right there can be done in 5 minutes. Recognizing it in real-time charts maybe takes you another day. But by the end of the week, this is a pretty simple concept to understand. Then you have to understand it not in bars, but in context of charts, and then in context of patterns and trends, right? So when you look at this, yes, it's very powerful. The size and number of candles matters. If it's happening over a longer period of time, it's more potent. It's the same reason a daily chart is more potent than a 1-minute chart, because it's happening over a longer period of time with more or less commitment from a broader group of people. Over a 1-day chart, you might have 10 million shares. Over a 1-minute chart, you might have 10,000 shares or 100,000 shares. So yes, it matters. But the larger the time frame, the more potent and powerful it is, which is where the top-down approach comes from, right? You start with the daily or weekly chart and you work backwards. You don't start with the 1 minute and work up. You start with the daily or the 60 and you work down. Oh, that's great. But I just taught it to you in 30 seconds. Sure, examples would help, right? And we've done entire lectures on this slide. Literally, there are lectures on just this slide plus some real-world examples, right? But location, level, and depth of penetration matters a lot. But something matters more, and that's what we're going to talk about. Okay? That's what we're going to talk about. Why do traders fail? And here's the funny part, guys. I've been doing this a long time, and I've done a lot. We just talked about, I've probably done 500 lectures. Okay? There's just something about text slides and psychology that everyone knows they need help on, but as soon as they don't see a chart on the screen, they log off. It's astonishing to me. It's like, oh, wow, that might require real work. It's like going to the driving range and just hitting your driver all day. 70% of golf's inside 100 yards. Why would you spend most of your time hitting a club you might only hit 5, 6, 7 times in a whole round of golf? Whereas your putter, you're probably going to use 30 sometimes. Think about it. You spend more time hitting that long ball than you do on the greens. It's the same with traders. You spend more time staring at charts than fixing your mental problems. Okay? And don't get me wrong, both need to be addressed, but you need to be objective enough to know which one needs more effort, more work. So, some reasons that traders fail, guys. Poor money management rules. They exceed their maximum daily losses. We see this happen all the time. And the reason people read this stuff and go, yeah, I know. And then I say, well, then why do you do it? Jeff Yates has a great saying. It says, to know and not do is to not know. To know and not do is to not know. So you might say, yeah, my maximum loss is 3R. And then I ask, well, why are you down 5R then? Oh, well, I wanted my money back, or I saw another trade that was awesome, but you broke your plan. Yes, that's it. It's a very clear black and white discussion. Did you break your plan? Yes, I did. Why? Mentally, you weren't strong enough, right? You can't accept the loss, okay? The market doesn't care about you, doesn't care about your family, or the fact that there won't be Christmas this year because you lost money by not adhering to your rules. I'm telling you, you need to get this into your thick heads. And I'm saying thick in a very loving way, because I was the same way. My head was like a concrete block. You guys ever, I think it's, what's it called, like ironwood or iron steel? I was just at the Red Bull Racing Factory, and he gave us a piece of aluminum, a piece of magnesium, a piece of titanium, and then this iron metal. I can't remember what they called it. And it was literally like 30 times heavier. That was me. That's how long it took me mentally to overcome this stuff. You have to get into your heads. The market doesn't care about you. And it's a good thing. Trust me, you don't want the market dialing in on you. All right? Some people take it as a negative, like the market doesn't care, no one cares. That's wonderful, right? It's absolutely wonderful, because that means it's entirely up to you, and your future is up to you as well, right? So your family, Christmas, baby needs new shoes, that's on you. It's not on the market being choppy. It's not on the market being giving. It's not on the market trending or being narrow range. None of those things matter. So if you don't adhere to a strict system that keeps your trading account from dwindling, you're not going to have a trading account. This is why I tell new traders $5 risk. Okay? $5 risk. Why? Because you're going to make some of these mistakes. So I'm pre-planning the mistakes in for you. I'm saying, look, I know you're going to make the mistake. Then that's okay. Right? Guys, to win, you first have to lose. Right? To be good at something, guess what? You first have to be bad at something. Tell me I'm wrong. To be good at something, to be great at anything, first you have to be bad at it. I don't care if it's breathing or walking or playing tennis. You're going to be bad at it at first. Hence, they say use the term, you crawl before you walk and you walk before you run. This concept, this arrogance, this ego that you should automatically be great at this business in a week or 2 weeks or a month is absurd. It's absolutely absurd. It's pure arrogance on your part. There's nothing in the rest of the world that works that way. Nothing. You're not great at anything the first time you try it. You might be better than your neighbor, but that doesn't mean you're good at it the first time you try it. Okay? So, poor trade management rules. You sell too soon before your target objective. Derek, are you out there? Derek. Let's mention Derek again. Right? 12R is what your plan is up, and you're up 5.5. And like I said in a joking but serious manner, say hi to your boss for me, because you're going to be seeing your boss quite a bit by doing those things. It's not meant to be funny. You will be getting very friendly with your boss at your job if you keep doing those things. But once you recognize and start making necessary change, your boss will become a distant memory. You will be your boss. But right now, you have another boss because you can't control your emotions. And while it sounds like I'm speaking to Derek, I am not. I'm speaking to everyone. Okay? Use a trade management system you can't follow. This is a tough one for people. I did this. I absolutely had a trade management system that made money. I just couldn't follow it. So instead of tweaking it to something I could follow, I just kept not following it. I want you to think about what I just said. I'm going to say it again. Instead of tweaking my management system to something I could actually follow, sure, it may have been less profitable, but to something I could follow, I just kept not following. And I just kept not making money. Stupid is, stupid does, sir. But I was stupid, right? Arrogance, ego, okay? Lack objectivity, ego's too big. Emotionally irrational, ignore basic common sense. You're basically in denial about your shortcomings. Or you admit your shortcomings, but you're in denial about fixing them. You might admit, yes, I sell too soon. But then the next line is, but I'll fix that tomorrow. Who's done that before? I did that for about a year straight. Literally, like, I'm not exaggerating, almost a year straight. I understand that I'm selling too soon, but I'll fix it tomorrow. Okay. Not until I woke up and truly got objective and realized, well, whatever you've been doing isn't working, so maybe try something else. Because fixing it, quote, tomorrow is just a pipe dream, pie in the sky type stuff. Okay? Can't cope with change. Well, if you can't, you're not going to be a very good trader because the market's always changing. We have to make small, minor adjustments. Okay? We have to adapt. The market just is. It doesn't adapt to us, we adapt to it. I'll repeat it. The market doesn't adapt to us, we adapt to it. It's the sun. Okay? It's the sun. You don't adapt to it, or it doesn't adapt to us, we adapt to it. Now, thought. If you're not honest with yourself, how can you build on your weaknesses? How can you be better? Well, we talk about accountability partners. We talk about consequence systems. And this is what I mean, guys, where I get long-winded. We're on slide 4 and I have 15 more. Like, I'm going to have to start moving on is what I'm getting at, right? You lack persistence, laziness, simply don't work hard enough. Now, tell me your ego won't allow you to admit those things either. Guys, everyone has a different opinion of what hard work is. And that definition or opinion of hard work, a lot of it largely is based upon your upbringing. I'm not joking with you. You got to pay attention when I say these things. You may have a family that considers 40 hours a week as hard work. Someone else might come from a family that works 100 hours a week, and 40 hours a week is damn near part-time / vacation time. There's a difference. So one person's putting in an extra 20 hours a week and doesn't even think they're working hard, and one person's putting in 40 hours a week and thinks they're working their ass off. It's just perception of how you were brought up and how you were raised. I know lots of people that work 40 hours, come home, hit a beer, kick back, watch TV, and they'll tell you, I work hard. Okay. That's your perception of the world, and that's okay. But I am telling you, trading, there's no such thing as that. You work as hard as you need to work until you get it. You see what I'm saying? See, it's not like you go to work and it's like, all right, I finished my Excel spreadsheet, I'm going home today. Oh, I finished digging that ditch, I'm going home today. I finished my 8 hours, I'm going home today. Trading doesn't have that. There's no such thing as time. It happens when it happens. And I tell you, the more effort and time you put in, the sooner it will likely happen for you. It's not like any other job you've ever done. The other jobs, it's like, all right, I finished painting the sidewalk today. Tomorrow I'll paint the next sidewalk. Trading's not that way. It's a malleable thing. It never stops. You work as hard as you need to work till you get to a point where you fix the problem. Does that make sense? Imagine you have an emergency. You don't stop until you fix the emergency, right? If your house is flooding, you don't just say, yeah, it's been 2 hours. I'm going to stop. I'll come back tomorrow. No, your house is flooding. Your house is on fire. You stay until it's fixed. That's trading. That's trading, okay? Your expectations exceed your experience. You're greedy and naive. Be honest about it. How many of you trade far above your experience level? Your expectations grossly exceed your experience. You have an expectation of a 5-year trader, but you've been doing it for 5 months. Again, how you entered the business, your preconceived notions play a big role in that. You demand too much too soon and you're unrealistic. Your timeline's too short. You have an improper focus. You're thinking about money instead of proper trading or following your plan. These are a lot of things the traders do to help themselves fail. In fact, you've heard me say it before. Many traders fail before they ever take their first trade because of their preconceived notions about this business. Okay? You guys have seen me use this slide, and I've used it quite a few times through the years. All right? You need to understand yourself. You need to be mindful. You need to be aware of your thoughts, beliefs, and biases in real time. And that last part, the in real time part, is the most important part of that sentence. A lot of people can be aware of their thoughts, beliefs, and biases in hindsight, but that doesn't do you any good. You have to be able to recognize them in real time. Understand your thoughts and state of mind follow your emotion. Think about that for a moment. Emotion kicks you in the ass first, and then later on regret happens. Halle Berry in the elevator and no one's looking. Your emotions are kicking right now. Your thoughts and state of mind will follow later on, going, what have I done? Right? Now that's a joke, but not really. Think about it. You will make a rash, emotional decision, Derek, to get out of your trade before you're supposed to, and later on you'll comment on it in the chat room and going, Jared, my plan's up 12R, but I'm up 5.5. Well, that's emotion versus thought. The emotion overtook your thought, and therefore you're up 5R instead of 12. If your thoughts overtook your emotion, you'd be up 12R. Do you see the difference? You have to find a way to push your emotion aside and let your mindfulness take over so that you're aware that, oh, my emotions are kicking in right now. I need to leave this elevator. Ooh, I'm an alcoholic. My emotions are kicking in right now. I need to walk away, get out of this bar. I'm susceptible to doing something foolish. That's mindfulness. The ability to say, whoa, this could be trouble, walk away, versus saying, fuck it, I'll just do it anyway. How many of you have given into that? Truth, we all have at some point in our life regarding something. We all have. Someone's goading you, right? Someone's saying, you're this, you're that, you're this. Instead of walking away and going, it just doesn't matter, sticks and stones, it doesn't matter. You get caught up in it, and then you regret it. You regret it. And it snowballs and tumbles and fumbles, etc. I got in a nasty argument with my dad just over a year ago. And at the beginning I said, walk away. I literally told myself, mindful, walk away. I'm walking away, makes a comment, drug me right back in. That was it. I still think about it a year later. How stupid. Tell me you don't do that with trades. It's foolish. Emotions are triggered when there is a disruption of a familiar or established pattern. This often leads to stress, which leads to fear, which leads to bad decision making, which leads to improper trading, which leads to lost money. You see that rabbit hole, that Pandora's box you opened up? The disruption of a familiar or established pattern led you down that rabbit hole, and that rabbit hole leads to lost money. Okay? And that is where you need to step back and go, whoa, look where this leads. Let's take the other path. You literally need to be mindful in real time and see the future and go, if I do this, this over here is going to happen. But if I walk away, I just walk away. Most people can't separate the two. We create our understanding of our world from our adaptations to our deepest fears and desires. Okay? You must develop mindfulness as a tool, guys, to examine your thoughts in the middle of a trade before we take a trade and even after we've exited it. Okay? Otherwise, you lose that perspective, right? And then you begin the fear-based process of selling too soon, or staying in a trade you should get out of, or taking a trade that you know is crap because maybe you were down today and you took a couple losers and now you need to get your money back. Don't do it. Okay? everything, as we talked a little bit about on the last slide, everything has a cause and effect. So you need to sort out you, and that's the thing that no one else can help you with. You have to start learning about you. Meaning, what is the cause and effect with you? Like, some people know, it's where that phrase comes from. Oh, she's really pushing his buttons. Oh, he knows how to push her buttons. Well, what does that mean? It means they know what gets you riled up, which means you also know what gets you riled up. So what's the cause and effect? You have to sort that out because the market will, quote unquote, push your buttons, right? The market will push your buttons. What do you do about it? Do you walk away or do you get goaded into the fight? Don't give into it, right? So you must determine, if you sell too soon, is it because you're scared to give back profits? If you're scared to give back profits, is it because you need the money? If you need the money, how can you overcome the issue? Maybe get a part-time job, cut back on living, whatever. But the point is you see this, it's almost like one of those Venn diagrams in a way, right? A flow chart, if you will. A happens, B's the result. You need to see every move. It's like chess. You're not making the move right now. You're making this move because of something you would like to see happen 3 or 4 moves from now. When you race a car, you're not actually looking at the current corner. Your eyes are always looking at the next turn. In golf, in car racing, the ball goes where your eye goes. The car goes where your eye goes. In trading, it's the same thing. You have to see 3 moves ahead so that when you make the current move, it will be positively affecting the future outcome. But if you're not aware that the current thing that you're about to do is going to screw you 30 minutes from now, then you have a problem. You're not being objective. Now, every once in a while, you just don't know. And that's fine. That's like being a new trader. That's okay. But it's when you do know and you do it anyway. That's a problem. Okay? So this is a process you have to go through to determine what the cause and effect is in your trading business. And the reason I comment on this, guys, is when you come into trading, you're going to have a preconceived notion. We all do. We all do. No one is immune to this. But as you start to trade a week, a month, a year, you learn so much about yourself. Wow, I didn't think I would react that way. I can't believe I reacted that way. Or wow, positively speaking, I did the right thing when I was supposed to. You have to learn so much about yourself in the beginning. And this is why I say, before you're good, you have to be bad. And this is why I tell you, risk $5 a trade, because I know you will be bad. But that's okay. It's part of the learning process. There's nothing wrong with it. And once you accept that what you're doing is normal in terms of making mistakes, you'll be better for it. You won't get so negative and won't so down on yourself. But where the problem lies is when you make the same mistake 20, 30, 40, 50 times over. That's a problem. Making mistakes a few times, that's part of life. That's part of learning. That's the process. It's making the same mistakes. That's the problem. Okay? Sometimes the answer is not what you want to hear. Sometimes it's poor preparation. Perhaps lack of operating capital, right? You might have to reproject your timeline. Meaning, because of preconceived notions, and now after you've traded a few months or a year, you've recognized the deficiency, you've recognized the truth, you may have to reevaluate certain things about yourself and about your trading business. All right? You may have to get a part-time. You may say to yourself, you know what? I have a year's worth of savings and I'm going to trade full-time for a year. Well, you may have to, the 9-month mark, may reevaluate. You know what? I've learned so much in these 9 months that I didn't know, that I know it's going to take 2 or 3 years. And therefore, I need to get a part-time job to get me through that second or third year. Well, that's a tough pill to swallow, but it's a necessary pill if you want to be good at it. Most people, I'll figure it out in the next 3 months. It'll be okay. No, you won't. No, you won't. Okay? So it's just one of those things that you just have to be objective with yourself. And if you're not, well, you won't be around very long. And guess what? The market doesn't care. You won't be around very long, and the market doesn't know you, so the market can't possibly care about you. You'll just be another statistic. So, trading psychology summary, right? Are you willing to lose money on this trade? If not, don't take it. What does that mean? That doesn't mean take bad trades. It simply means it could be a good trade, but regardless if it's good, it still has the possibility of losing money. And if you are not prepared to lose whatever money you're risking, then don't take the trade, okay? Learn properly from the start, as it's much harder to correct deeply ingrained bad habits. It is. I told you my golf story. I have not a crazy Jim Furyk swing, but it's a little bit unusual, slightly. But I was a pretty good golfer. I took my first lesson, and the pro said, yeah, you're solid. How good do you want to be? And I said, I want to be great. He said, seriously, how good do you want to be? I said, I want to be great. He said, okay, I'm going to take you at your word. He ripped apart my golf swing, just like down to infancy. Like I went from a very good golfer to crawling, okay, to crawling. I did that for a month. And I said to him, honestly, I guess I don't want to be as good as I thought I wanted to be because I didn't enjoy it. And he said, Jared, when you first started playing golf, even with your current swing, you didn't enjoy it very much, did you? I said, I didn't. He goes, but you did it anyway, didn't you? I said, yeah. He goes, well, this is the exact same thing. So the only difference is now you know what fun is. When you started, you didn't. But now you do. Do you see where I'm going with that story? It's a true story. Where he's like, you'd be okay trying my method, my new swing, if you had never played golf before because you didn't know how to play golf and it wasn't fun anyway. But you knew that because you're brand new at it. But now you've played golf for years and you're enjoying yourself and you're having fun, and I'm taking your fun away. So you don't want to rip your golf swing down for the next 3 to 6 months because it's not going to be fun. So the point I'm making is I didn't want to be as great as I thought I wanted to be because I wasn't willing to do what he said. I was penny wise, dollar foolish. I was winning the battle, losing the war. Because his point to me was, guess what? That 3 to 6 months is going to come and go. It's going to come and go. Whether you choose to do it this way or you choose to do it that way, 6 months is going to come and go. So if you're willing to deal with it for that 6 months, you'll look back and be glad you did. And I chose not to. Traders do this all the time. They do it all the time. And then a year passes by, and they either get frustrated and give up, or they finally get kicked in the teeth enough times to say, I just can't continue like this. I have to change. And the saying I said earlier, you will not change until the pain to stay the same becomes greater than the pain to change. It takes a lot for that to happen for most people, right? You will only win if you aren't afraid to lose. So the fear as well as the need to be right. You need to lose that, right? You need to lose that fear. If you're afraid to lose, you'll never win. It's part of winning. Losing is part of winning, okay? Trading is simply having the knowledge to know when the odds are in your favor, the patience to wait for the moment, and then the discipline to handle the trade properly when it goes in your favor, or properly even if it goes against you. Read that sentence again. I won't. You read it. Take a screenshot of it. Take a picture. There is no more accurate statement about this business than that statement right there. Your job is to identify your edge, assess the risk to reward, the reward to risk, and monitor your emotions. And then take the trade. Succeeding in the stock market means controlling natural impulses and reversing unwanted emotions. For example, do not fear losses. Rather, hope for gains. Wins and losses are part of trading. No one bats 100%. No one bats 100%, which means losses are a guarantee. Losses are a guarantee. If you can't accept one, this ain't your business. Okay? Are your wins larger than your losses? If the answer is yes, then you'll likely succeed. If no, then you won't. Or you have to have a very, very high batting average. All right? Good trades most of the time jump out at you. And you can see that by my emotions, Unmulls emotions, Cliff's emotion. You know when you see something we really like, oh wow, that's really good. Unmull posts a trade on Microsoft today. I looked at it and go, guys, look at that 2-minute buy setup. He took options on it. I typed in the chat room as, look at that 2-minute buy setup on Microsoft. You immediately know. So if you don't immediately know, it's probably not that good. It's probably not that good, okay? So discipline's the key to success, and discipline is simply doing the right thing at the right time. Yep, Jeff takes textbook trades, Chris. Textbook. 90% of the time. Guys, discipline's the key to success, and discipline is simply doing the right thing at the right time. Doing what you're supposed to do. Bill Belichick, just do your job. You know what your job is, just do your job. Okay? Trading is 99% waiting for entries and targets and 1% actual activity. The 99% should be spent scanning and looking for other opportunity. Okay? That's what it's all about. Break-even trade, guys. This is a trade I took on CLF, I don't know, a year or two ago. Okay? Got in right here. Saw a little doji bar, engulfed it, 1760, 1740. Well, it almost went 2R. Almost, right? It went 30 cents, 35 cents. I shouldn't say stopped out. I trailed. I should say that. Trailed out at. So there. I hate using the word stopped because it's not actually stopping. Okay? Trailed out at break even. Okay? Management used 3R targets go to break even at 1R. So break even trade, but 3R all or nothing made 3R. Okay? It did. Hold on. We're not done yet. All right. 4-bar play. Pretty nice too. Gaps up. 4-bar play. Same management, now what? Break even got me, quote, got me last time. And that bottoming tail looks like a bounce. So I'm holding this time. Obviously, you can see the future over here is supposed to be hidden. Messed that one up. Okay? Let me see if I can pull that through. Oh, pull through. Okay. Right? So what happens? This time, it peekaboos, pops up a little, pulls back. You hold, because you're not going to get caught out this time. Right? It puts in a little buy setup that fails, bounces, and then just rolls over. And you're caught bag holding. Because you were so upset over here that it tagged you at break even, held your stop, and worked. I think Derek was talking about that. The trade went like 1.75R and then came back to break even and trailed him out. Oh, well, you're not after one trade. You're after the big picture. You're never after one trade. Right? You're after what happens over 50, 100, 500, 1,000 trades. Okay? So now, because of this trade, and you're pissed, the next time it happens, you ride with it. And you don't take your stop. And then, now you're bag holding. Follow your plan. It's not going to be perfect all of the time. And you know what? Here's a good example of that. Trading can be very, very frustrating. Take a look at this. This is from 2022, so a year and a half ago, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive losers I took. 9 consecutive losers. Then a tiny little winner, another loser, tiny little winner, another loser. You're like, holy shit. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trades. And the biggest winner was $290. Okay? On $1,000 risk. Now again, some of the risk level was a little bit different on some of these, right? 500, but most of them are about $1,000. Okay? The vast majority. And then what happens? Winner, 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 chicken dinner. All of those losses were gotten back in 3 trades. Okay? Just about, give or take, right? All of those losses came back in 3 trades. Think about that for a second. So this is the frustration. Depending on your management, you may go through some nasty losing streaks, right? You may hit some losing streaks that are 5, 10, 12, 15 trades long. If you're doing 3, 4 all or nothing, this will absolutely happen to you, right? But when you start winning, man, you win, right? It's the same thing. I just made it a little bigger so you could see it a little more clearly. That's all, right? And you sit there and you're like, man, that's tough pill to swallow, right? Losing on those trades. And you got to go back and you sit there and go, well, did I make a mistake? Were they good trades that just didn't work? And then some of them like popped over an R, then they stopped, right? Popped nearly an R, then they stopped. Popped 1.5 R, then stopped. I mean, popped 1.3 R, then stopped. So that was a scalper's paradise in here, right? Half R, 1 R paradise. But then they started moving, right? They started ripping. Okay? And then other times, sometimes you can do no wrong. Sometimes you can literally do no wrong. Everything you touch works. And on this particular day for Unmol, this is Unmol. I mean, he's got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 winners to 1 loser. Now, I understand some of these are the same trade. I understand that. But there are 17 winning lots to 1 losing lot. 7, 8 grand. Chipped away at it. None of those are massive winners, right? None of those are massive winners. But he chipped away at it, chipped away at it, chipped away at it, chipped away at it, chipped away at it. And sometimes, like I said, it doesn't matter what you do, you just can't lose. No matter how hard you try, you just win everything. Okay? Trading misconceptions. We talked about this one a couple weeks ago. I'm not going to spend as much time on it. Okay? You can't go broke taking profits. Well, this is exactly how most people do go broke. Affecting real change happens quickly. It does not. Core beliefs are not easily overcome. Sophia, you were talking about that the other day, about your circle of friends and belief systems and such. It's not easy to overcome these things. It's something new, it's something changed, it's something different. And it's painful. Human beings do not like change. We are creatures of habit. We don't like change. We just don't. But sometimes change is necessary to get to the next level. And sometimes it's painful change. So, it's the same thing. Jeff's got a lot of great quotes, right? Do what others won't do today so you can do what others can't do tomorrow. Think about it. A lot of people don't want to put the work and effort in because it's scary. I have a good friend. He's fairly successful, but he could be so much more successful. He's complacent. He's comfortable, but then he'll complain. I'll say, well, you have to take a little bit of risk. You're not just going to get ahead in life without any risk at all. That just doesn't work like that, and it's arrogant to think otherwise. There has to be some skin in it. There has to be some pain in it to make it worth the journey, right? Profitable trading is only for the lucky. It's bullshit. We see it all the time in here. We see the same people every day making money. The same people. I guess they're just the lucky ones. They're not. It's not a Prince song. It's the people who put in the work and the effort to make genuine change. You can copy your way to success without putting in the time. Oh man, that's every person in the chat room, every trial in the chat room. That's your dream, isn't it? Oh, Jared, your videos are so good on YouTube. They're amazing. I'm going to come into the chat room and I'm just going to follow you to the promised land. Doesn't work like that, does it? You come in, you're like, man, my head's spinning, my head hurts. Doesn't work like that. You take some of my ideas and use them if they fit your trading plan. Don't use them if they don't. But you will not copy your way to success. You'll learn a lot through watching other people. But just because I look at Tiger Woods' golf swing doesn't mean I can emulate it perfectly. I can try, but I'm going to still have to put the time in, aren't I? Okay? I don't know who that was. You know, Brian? I don't know. Just came out that way, right? Success comes quickly. Oh, boy. Yeah, what is that? There's a book like 10 Years to Overnight Success. Something like that, right? 10 years to overnight success. Okay? That's just not how it works. It's just not how it works. We'll learn from the market, so I don't need an education. Well, you're going to get one regardless. The market, from live traders, from me, from somebody else, you will get an education. One just happens to be far more expensive than the other. And the one from the market is very, very, very expensive. Okay? But you do need real-time experience. You absolutely do need that. Okay? Past success. This one is brutal. Brutal for people that have high IQs and are highly successful. Past success in another field gives you an advantage in trading. Unfortunately, this also sometimes keeps people from starting trading. I know people that are like, well, I don't have any background in finance or numbers or anything, Jared. I'm a construction worker. What business do I have being a trader? And I tell people, I prefer you. I prefer you. You know why I prefer you? Because you don't have any preconceived notions. You don't have any negative mindsets to overcome. I know your ego's humble. I'd actually prefer you over the guy coming off Wall Street because they have monster egos. I was one of them. We do. It's craziness. But your past success has little bearing on becoming a successful trader. Okay? This management or that management makes the most R. Therefore, it's the best management. The most profitable management isn't always the best management for you, specifically for you. End of the day hold makes a ton of money. I just find it really, really challenging to follow. Really, 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 really challenging to follow. Okay? Susie Q makes a ton as a scalp trader, so I'll use her approach to the market. Okay, you might be able to glean some positivity from Susie Q, and you might be able to learn some things from Susie. But at the end of the day, you're still you, and Susie's still her. Nowadays, that's hard, but you get my point. But you still have to make it your own. You will never exactly copy or follow somebody. Okay? NC Steve, Malcolm Gladwell got that from the Harvard Review. The Harvard Review did a study on that. So it's really not Malcolm Gladwell. I know the book you're talking about. I have it. I've read it. But it came from the Harvard Review. But you should read it. It's a good article. Say 15 or 20 pages. Anyway, trading is the great equalizer. A high school dropout or a Fortune 500 CEO, the market doesn't care. We're all the same to the market. Your ego, your experience doesn't give you an advantage. The market doesn't care if you're from Beverly Hills, if you're from Philadelphia, if you're from Zimbabwe. Doesn't care. The market doesn't care if you live in a tent or if you live in a $100 million mansion. The market doesn't care if your IQ is 180 or if your IQ is 80. Market doesn't care. And that should be encouraging to you because everyone has an equal opportunity there. It's a genuine meritocracy. Sure, do we all fight the same BS forces in the markets? HFTs, news reports, Fed person speaking, Goldman Sachs trying to dump on you, blah, 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 sure. But we all experience it equally. It's one of the greatest meritocracies that you can have. Educated, uneducated, doesn't care. Old, young, doesn't care. Smart, dumb, doesn't care. Rich, poor, doesn't care. Doesn't care. Doesn't care. That's a beautiful thing. Jeff Bezos could walk into your grocery store and the market does not favor him over you, does not favor you over him. You are equal to the market. It's a beautiful thing. Very few businesses and careers have that. Now, losing streaks, P&L watching. A lot of people have problems with trading because of P&L watching. All right? Have a good one, Joe. Have a good one. Have a good one, Dustin. I know it sounds like duh, but don't count your money until the money is in your account. All right? It's not yours until the ink is dry. Does that make sense? It's not a winning trade until you have exited all of your shares at target. What's the point? Leave it alone. Let it go. If you're 10 cents before your target, you're not at your target yet. Don't sell at 10 cents before. Don't start thinking about how you're going to have a winning day 10 cents before your target because you're not at your target yet. Stop looking at that green or red P&L going up and down on the left side, bottom side, right side, wherever it is on your screen. Stop watching it. Dollar counting, P&L watching, you're mentally spending the unrealized gains, but you're still in the trade, right? It's like celebrating with 2 minutes left in a game, and then the other team comes back and beats you. You just don't do it. You never celebrate until the buzzer goes off. You never celebrate until it says order filled at your target. Okay? Way too many traders do this. They're watching the P&L every second. It's up 20 cents. Oh, this is awesome. It's down 30 cents. Oh, what happened? You watch it way too closely. Way too closely, especially the all or nothing traders. There's nothing you can do about it anyway. Why are you watching the P&L? Take it off your screen. Set the bracket order. Walk away. Okay? That's true too. Sometimes, Jordan, you get those partial fills. Why? Why are you P&L watching? Well, maybe you're trading with scared money or thoughts of, what if? What if? Tell me it's not the worst when you take a first trade loser and then you're in a second trade and it's moving up and it's moving up, it's moving up, and then it pulls back on you. You're like, oh, my open P&L was above break even. Now it's below break even. What are you doing to yourself? Nothing productive. That's the answer. Nothing productive. You're literally dollar counting. You're not actually objectively watching the trade to see if it's doing what it's supposed to be doing. You're dollar counting because your first trade was a loser and you want your money back. So you get out for a smaller gain, maybe because that got you back to break even, because it's scared money. Your lack of confidence based on a lack of knowledge or poor recent performance. You're not trusting that you will do the right thing this time due to a lack of confidence. Maybe you're trading too many shares or too much risk. You're just not doing what you're supposed to be doing when you're supposed to be doing it. But here's the bigger problem. You're not making it any easier on yourself. You're actually making it harder. Right? You're actually making it harder on yourself by staring at it and doing the wrong thing. And if you're overly susceptible to doing the wrong thing, then staring at it doubles down on the possibility you'll do the wrong thing. Hold on, let me repeat that. It's important. When you know that you're susceptible to doing the wrong thing, and then you stare at the trade, you're just doubling down on the possibility that you'll actually do the wrong thing. That goes back to mindfulness. That's like saying, there's Halle Berry sitting in some lingerie in the elevator, and it's like, oh my gosh, am I going to walk through the elevator, or am I going to take the next one? Fuck it. I'll just take the elevator. You're putting yourself in a bad position, putting yourself in a spot where you know the odds of you doing the wrong thing are high, but you do it anyway. You lack the mindfulness and the mental fortitude to walk away. And that's where a trading partner, consequence partner, accountability partner, trading buddy, whatever you want to call them, is very important. So, if you do have a nasty losing streak because, well, you do stupid stuff sometimes. Now, don't get me wrong. You can do good things and still have a losing streak. That happens. Okay, that happens. So this applies to both. This applies to you doing the right thing and having a losing streak. This applies to the person who does the wrong thing and has a losing streak. Number one, okay? Stop trading. It's one of the hardest things to do. Trading is like crack cocaine. Many new traders tell me I'm wrong. You don't even want the weekend to come. Saturday, Sunday, you're like, the market's closed. Oh my, what am I going to do? That's a terrible mindset, by the way. Use the weekend to enjoy yourself. Brush up on some of your trades. Get better. Okay? Relax if you need to. But number one, stop trading. Take a short break. Pause, refresh, clear your mind. Note, when I say stop trading, this doesn't mean for months at a time. Depends on how bad things are. You could stop trading for an hour. It's like a market halt, right? You could stop for an hour and then get back to trading. But pause, refresh, clear your mind. You might need to stop trading for a week. You might need to stop for a month if you're really doing some egregiously bad stuff. You know, if you're taking every elevator that Halle Berry's in instead of just once in a while, that's egregiously bad. Okay? Take a short break. Take a longer break. Review your tracking spreadsheet in your journal. What do you see? What's going on inside? Oh, I don't track my trades, Jared. Well, there you go. Guys, you know how many people don't track their trades? Most. 80, 90% of people I meet, they literally write down their P&L at the end of the day, and that's it. Are you kidding me? You don't journal your emotions during a trade? You don't track specific metrics, entry price, stop loss, target, what happened to the trade? It's terrible. What mistakes are you making, and why are you making those mistakes? Guys, this is where a trading partner, trading buddy, a coach, going to Cliff's coaching, this is where an accountability partner would be very, 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 very valuable. But you don't have that either, do you? You're telling me, you're looking me straight in the eye and saying, Jared, I take this business more seriously than anyone you have ever met. And you don't track your trades, you don't have an accountability partner, you don't have a consequence system, and you never follow your plan. Really, how serious are you? Yeah, well, I meant to do it. I mean, I'm halfway through my plan. I just haven't finished it. Well, if you're halfway through your plan, why are you trading real money? You don't have a guideline, you don't have a roadmap, you don't have a plan, you're just going to wing it? This ain't that business, okay? So what mistakes are you making and why? Start each day with positive affirmation and reviewing your routine and your checklist. All right? Unmal has his, he doesn't call them affirmations, or what is he? He does a little clap and whatever, right? Anchors, that's what he calls them, anchors. Start your day with that. Go back to paper trading if you have to. If it's so bad that you're continually making these mistakes and losing money, go back to paper trading for a week. Never take a trade without referencing your pre-trade checklist. Review PTS, have a trading buddy, review your trades, get coaching. Everyone falls, but not everyone gets back up. You're going to fall many times. You're going to disappoint yourself. And there's nothing worse in this world. We always say, there's nothing worse than when your kids disappoint you. No, that's incorrect. There's nothing worse than when you disappoint yourself. The question is, what do you do about it? Will you get back up from it, or will you stay down on the mat? And there are times when getting back up is like a Hollywood movie. You've been punched in the face 57 times, and you really shouldn't be getting back up, but you need to. Right? You need to. Because this is going to happen to you. It's not an if, it's just a when. Okay? So, you have to. If you want to be a successful trader, you don't have a choice. It's that simple, guys. If you want to be a successful trader, you don't have a choice. Take a trade prior to gaining information needed out of fear of missing the trade, FOMO. Impulse trades are common reasons for bad trades. Tracking your trades, journaling your trades, consequence system, trading buddy will help that. Selling out of fear that prices will move against you rather than that of those prices rising, or not objectively reading the chart. The chart doesn't know you, it just is. When the chart misses your target by a penny, it doesn't know it missed your target by a penny. When the chart stops you out by 2 cents, it doesn't know it stopped you out by 2 cents. It's just a chart. It doesn't know. Start thinking more positively. Start, instead of thinking, it's going to just barely miss my target, think, of course it's going to hit my target. And if it doesn't, you just tell yourself, the next one will, because the odds suggest so. But you have to believe it. There's a difference. And you've heard me use this analogy 1,000 times, but it's Neo in the Matrix, right? He's beginning to believe. You just don't believe. You're just not there yet. And when you do believe, it's that phrase I use frequently also. Experienced professional traders come in expecting to make money. Inexperienced traders hope to make money. You walk on that tennis court, I guarantee you Novak Djokovic expects to win every match he walks on the court. He doesn't win every match, but he wins a lot of them. The brand new person playing Novak Djokovic hopes to beat Novak that day. They don't expect to, they hope to. Very few players feel otherwise. Is that you? Do you hope or do you expect? And you ask yourself, why? People that expect to make money expect to make it because they've overcome those fears and emotions, and they're confident in their approach, and they're confident in their ability to follow their plan. Having the patience and discipline to apply these techniques will be your biggest challenge and will be immensely frustrating at times. But if you have any hopes of succeeding as a trader, you have to master your emotions, put your ego in the closet, and overcome the fear of loss. It's just a game of odds. Believe it. If not, then find something else to do. Believe it, or find something else to do. This doesn't mean you're going to believe tomorrow morning. I mean believe, deeply believe. Not lie to yourself that you believe. You may have to do that for a while. But this is where meeting with a trading buddy, reviewing trades, going into Cliff's coaching, coming into the chat room, talking to other traders, all of these things help you be better. Okay? And at the end of the day, the goal is to just be robotic. Focusing on dollars once in a position is a trap that leads to failure. Planning each trade before you take it allows you to set and know your maximum loss. Once the trade is entered, you should have completely accepted the possibility of the maximum loss, including slippage. If you cannot accept it, decrease the share size or don't take it. The only thing a trader needs to focus on after entry is the chart and market environment. Robotic indifference. All emotion should be removed from the decision-making process. How objective are you? Now remember, we talked about it earlier. Being mindful means understanding what you're thinking and how you're feeling in real time, wait for it, before you react to it. Understanding how you feel and what you're thinking and all of your emotions before you react on them. And then the next step is taking a look at that and going, wow, if I choose this path, it leads to success, not having a boss, having successful trades and doing what I want to do. If I choose this path, it leads to always having a boss, not having successful trades, and probably working for the rest of my life for somebody else. Literally, you need to look 3 or 4 steps down the road because it will help you make a better, more informed decision. It's okay to occasionally lose a battle if you're going to win a war, but don't be penny wise and dollar foolish. Don't trip over dollars to pick up pennies. A lot of people do that. They sell too soon. You're tripping over a dollar to pick up a penny. Don't do it. So guys, it's quite a lot of information in today's lecture. I haven't done what I would call a hardcore psychology or deep dive in a little while. It's the most important part of your trading success or your general success in life. You've heard the phrase before, life is 90% what happens to you and 10% how you handle it. The what happens to you is going to happen to you. Let me repeat it. The what happens to you, it's going to happen to you. Every once in a while, you're going to trip, break an arm. Once in a while, you're going to get in a car accident. Once in a while, you're going to feel like crap. Once in a while, your boss is going to say something mean to you. Once in a while, you're getting in an argument with your spouse. Once in a while, you're going to get into a trade that's 1 penny from target and it goes all the way back down. Once in a while happens once in a while. How do you handle it? Are you going to handle it like a pro? Or are you going to handle it like a novice? Handle it like a pro, the future is bright. Handle it like a novice, you'll just be another statistic to quit the business. And no one, I'm telling you, no one gives a shit. You know how many people have come through the chat room? Thousands, tens of thousands through the years. I don't remember their names. I seriously don't remember their names. Don't even know what they're doing. Sounds mean, don't care. That was the path they chose, fine. No problem. No problem. I wish everyone the best. I wish them well. In anything in life, I wish everyone well. But if you want to be special, you want to be that top 10%, that top 5%, that top 1%, then you need to act like that top 5%, 1%. You need to act that way all the time. That is the hardest part. Doing what you're supposed to do when you're supposed to do it, no matter what. And doing it every time. So I hope that you guys learned a little bit about emotions, psychologies, charts, what it takes to be truly successful in this business. And I hope it will help you become a better trader and a more successful one at that. I'm Jared Wesley of Live Traders. We'll get back at it again next week.